Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. We have the U.S. jobs report coming up at 8:30 a.m. and the markets are taking the dollar a little bit higher and trading here today. So let's take a look at the technicals that would the key levels that are in play for some of the major currency pairs. You can go to our website to see what is expected from the U.S. jobs report. So this is going to focus mostly on the technicals here. And looking at the euro versus U.S. dollar, we've been focused on two 50% retracement levels. One is off the hourly chart. If you look at the swing low from December to the swing high from December, the 50% retracement comes at 1.0931. And the price has moved below that level. You can see the move to the downside in the Asian and / early European session. We did get favorable inflation data, which helped to push the price out further to the downside, and you can see that the price has seen a rebound off the low levels on the downside. What is key would be this 61.8% retracement and swing area between this area between the 1.0879 and 1.0895 type area right through here. You can see how the market sort of traded above and below that level through here before moving higher, and then based at this level before moving to the upside. So getting below this level would be more bearish, and then we look toward the 200-day moving average. That's comes in at 1.08447. That's on further euro versus US dollar selling. That's a dollar buying on the top side for this currency pair. In addition to the 50% retracement level here, I want to bring focus to the daily chart. And if you take a look at the 2020 high and the 2022 low, the 50% retracement of that move comes in at 1.0942. And if we were to get back above that level, I would think that they would shift the bias more to the upside. Once again, I've put a horizontal line here at the 1.0942 level. I'll put it in red here just to increase its level's importance for you, or so you can see it, and you can see how in trading yesterday and today, the market tried to hold support against that level before breaking below that level and finding willing sellers against it, pushing down below the 50% retracement in the process, and putting a lid on that pair as well in the corrective move here. So getting above both the 31 level and the 42 level is going to be my key barometer for more bullish. And then we'll look toward the falling 100-hour moving average of 1.09627. If you can get above that level, then things are looking even more positive for the euro versus US dollar. So those are our key levels for the euro versus US dollar. Just follow the progression. That's the roadmap for trading and the bias and risk and all that stuff. So be aware, be prepared. Let's take a look at the dollar versus yen, and we'll look at the hourly chart. And this currency pair moved above the 38.2% retracement of the move down from this high going back to November to the low price that we saw here. That's what we want to see in a trend-like move. This is a trend move to the downside, and we want to see a corrective move that gets and stays above the 38.2% retracement. What I like about this is that yesterday the price moved above the 38.2 and then fell back below. In the early Asian session, the price moved back above that level, and as you can see, it tried to hold support right here against the 38.2. We went a little bit below it, but we did find support buyers and we pushed above that level. So this level is going to be the just a short-term close barometer for more bullish or bearish through the report. If the price were to move below 144.698, I think it would be more bearish. We look down toward this area right through here as the next target between 143.392 and 144.09, above and below the 144 level. If we break below that level, then we look toward the 200-day moving average down here at 143.20. On the top side, the next target level comes in up here at the 50% retracement level. That level comes in at 146.07. We're currently trading at 145.12. So there's room to roll in both directions here for the dollar versus yen, but the 38.2% retracement is going to be our key barometer for this currency pair. More bullish number or stronger number would send the price higher toward the 50% retracement. More bearish number could see the price move back below the 38.2%, back toward the 144 level, and we'll see what happens there. Finally, let's take a look at the sterling versus US dollar on the hourly chart, and we saw up and down price action trading yesterday above and below the 100-hour moving average. It's kind of messy, this chart, to be honest with you. I'm not sure, I get a lot of joy from it, to be honest with you. I'd probably stay away from it. But what I would like to see on a more bullish side, a bearish U.S. dollar or a declining U.S. dollar would be a break above the 200-hour moving average. I'd come after a weaker U.S. Employment report. On the downside, getting below the 61.8% retracement would be more bearish at 126.24. And then we look toward this swing area here. Now, there's a lot of different levels. You can see how the price moved above it here and then stayed below it here and then moved above it here. And in the more recent trading, the market did find support against this swing area right here, right here, right here. So this is going to be a key level on the downside for the sterling versus U.S. dollar going forward. Again, that's a stronger U.S. dollar. So getting below the 126.02 to 126.13 level is going to be a key target on the downside on a stronger U.S. dollar. So there you have it. A look at some of the major currency pairs and their T technical levels going into the U.S. jobs report. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.